Hello and welcome to another video. New Zealand punches above its weight on the world stage, right? Well, that is what we like to tell ourselves anyway. What is for sure is that in order for us to compete successfully as a country, we need research, development and innovation. Recognising the need for research and development in any country, tax incentives for R&D are part of the policy settings in most OECD countries. But until recently, except New Zealand. So the good news is that since 1 April this year, many companies that conduct R&D will be able to turn their tax losses into cash. By that, I mean they'll be able to potentially access a tax refund of 28% of their R&D expenditure. Until now, ordinary companies had to carry their tax losses forward and with luck deduct them from future income once the company begins to make a profit. But often the tax losses were forfeited over time as the introduction of new shareholders broke the continuity rules for carrying losses forward, so no tax deduction for R&D expenses. Often the biggest challenge for innovators is finding the cash to keep going, when commercialisation might be a distant possibility. So what are the criteria to start accessing the R&D tax credits now? So first you must be operating in a New Zealand resident company. Sole traders, partnerships, non-resident companies need not apply. You must apply to IRD before you file your 2016 tax return, so now's the time to act. And at least 20% of your labour costs must be related to R&D. The tax refund is limited to 28% of the lesser of eligible R&D expenses, 1.5 times the R&D labour costs for the year, and for now it's capped at $500,000. And of course there are exclusions. Activities outside New Zealand are excluded, as is market research and pre-production activities. And if your company sells the intellectual property resulting from the R&D expenditure, it must repay any tax credits paid out, which seems reasonable. So not every company that does R&D will qualify, but for those that do, this is a no-brainer. And the time to act is now, before filing your 2016 tax return. Thanks for listening, and please hit the subscribe button below for more updates.